Hello, dear friends. Today is Wednesday, February 11th, 2026, and I need you to pay very close attention to what I'm about to show you, because something unusual is happening in the crypto markets right now. Not a pump and dump scheme, not some influencer hype, but a genuine behavioral shift that's playing out in wallets, exchanges, and group chats across the world. People who used to stack Bitcoin almost religiously are suddenly talking about altcoins with the kind of intensity you only see when a crowd senses they're about to miss the next major wave. And if you think this is just about price movement or some random speculation, stay with me, because in the next few minutes I'm going to connect three dots that almost nobody puts together. Bitcoin dominance, the retail psychology of affordability, and a very specific pattern that keeps repeating itself whenever Bitcoin crosses certain psychological price levels. But before we dive deep, I need a quick favor from you. My analytics show something that honestly surprises me every single time. A huge portion of you watch these videos all the way through, but leave without subscribing. If you find value in this kind of no-nonsense analysis, hit that subscribe button right now and drop a quick comment, even just prime currency, so the algorithm knows you're engaged and actually here with me. Now let's get into the real story. On February 11th, 2026, Bitcoin is trading in a range that most people 5 years ago would have called impossible. We're looking at prices hovering near six figures. And every time Bitcoin touches or crosses that $100,000 mark, something predictable happens in human psychology. The asset stops feeling accessible. It stops feeling like something you can participate in without serious capital. And when that feeling spreads across millions of retail investors simultaneously, behavior changes. They don't stop believing in crypto. They just start looking for alternatives that feel more within reach, alternatives that still carry that same revolutionary narrative, but come with a price tag that does not require you to sell a car or remortgage a house. That's the shift we're watching unfold in real time. Now I want to build this story properly because the details matter and retention matters. Let me walk you through the framework the same way I'd explain it to someone sitting across from me at a coffee shop. Step one, the accessibility problem. Bitcoin has become psychologically heavy. Not technically heavy, not fundamentally broken, but emotionally expensive. When Bitcoin was at $10,000, buying one full coin felt ambitious, but achievable for someone saving aggressively. When Bitcoin hit $50,000, buying one coin became a serious financial decision. But now, at six figures, buying one whole Bitcoin feels like a luxury reserved for institutions, whales, and people who got in years ago. Yes, you can buy fractions of Bitcoin. Satoshis exist. You can own 0.01 BTC. But here's the truth most analysts refuse to admit. Psychologically, owning a fraction doesn't feel the same as owning units. Human brains are wired to prefer whole numbers, tangible quantities, stackable assets. This isn't rational, but markets aren't rational. Markets are emotional machines driven by millions of individual decisions, and those decisions are shaped by how something feels, not just how it performs. So when Bitcoin becomes too expensive to own in whole units, millions of retail participants start scanning the market for the next thing they can actually accumulate, the next narrative they can ride, the next community they can join. And that next thing, more often than not, is altcoins. Step two, the dominance shift you need to understand. Bitcoin dominance is a metric that shows Bitcoin's share of the total crypto market cap compared to everything else. When dominance is high, it means Bitcoin is sucking up most of the capital and attention. When dominance starts falling, it means money is rotating into altcoins. And right now, we're seeing early signs of that rotation happening again. This isn't the first time. It's a pattern that repeats in cycles. Bitcoin leads, Bitcoin runs, Bitcoin gets expensive, retail rotates into alts, alts explode, then the cycle eventually resets. But here's the key insight that most people miss. The rotation doesn't happen because Bitcoin is failing. The rotation happens because Bitcoin succeeded so much that it priced itself out of the retail affordability zone. Let that sink in for a moment. Bitcoin's success creates its own competition. Now, I'm going to add some evidence to this because I don't just want you to believe me. I want you to see the data and verify it yourself. In past cycles, whenever Bitcoin crossed major psychological levels like 20K, 50K, and now 100K, altcoin season historically followed within weeks or months. The crowd that couldn't afford more Bitcoin started pouring capital into Ethereum, Solana, Cardano, and dozens of smaller cap projects. The pattern is so consistent that traders have built entire strategies around it. But the mainstream never talks about this because the mainstream is always 6 months late to every narrative shift. Step three, the exchange behavior that confirms everything. If you want to know where the market is really moving, don't just watch price charts. Watch what's happening on exchanges. Watch deposit and withdrawal patterns. Watch which coins are seeing increased trading volume from retail-sized wallets. And lately, the signals are clear. More small wallets are moving into altcoins. More retail-sized buy orders are hitting mid-cap and small-cap tokens. More people are asking in Telegram groups and Discord servers, what's the next 10x? What's undervalued? What can I still get into early? That's not speculation. That's observable behavior. And behavior always leads price. Now, let me pause here and set up the next cliffhanger because this is where the story gets really interesting. If retail is rotating into altcoins because Bitcoin feels too expensive, and if this rotation follows a historical pattern that has played out multiple times before, what happens when that rotation becomes obvious to everyone at the same time? Because when a trend becomes obvious, it doesn't stay slow. It accelerates violently. And that acceleration is where people either make life-changing gains or get absolutely destroyed, depending on whether they have a plan or they're just gambling. So before we go deeper, let me share something important for those of you who want daily updates and deeper analysis without waiting for the next YouTube upload. I've created a members-only section and a notification system where I post real-time insights, portfolio strategies, and market alerts that don't make it into the public videos. If you're serious about staying ahead, check the links in the description. Now back to the main narrative. There are two ways this Bitcoin to altcoin rotation can play out, and you need to understand both scenarios because both can hurt you if you're careless. Scenario 1, the smooth rotation. In this version, Bitcoin stabilizes or continues grinding higher while altcoins start catching aggressive bids from retail and even some institutional flow. In this scenario, altcoin market caps expand, narratives strengthen, and projects with real use cases or strong communities see sustained rallies. This is the dream scenario, the one where patient accumulators get rewarded and the market feels like it's working the way it should. Scenario 2, the violent whipsaw. In this version, Bitcoin suddenly corrects hard, maybe because of a macro shock, maybe because of leverage liquidations, maybe because whales decide to take profits. When Bitcoin dumps, altcoins don't just follow. They collapse twice as hard because altcoins are higher beta, higher risk, and more emotionally driven. This is the scenario where people who bought the top out of FOMO get wiped out, where portfolio values drop 40, 50, 60% in a matter of days, where panic selling creates cascading liquidations. And here's the brutal truth. Both scenarios can happen in the same cycle. You can see a smooth rotation for weeks, and then one news event triggers scenario 2 overnight. That's why the real question isn't, should I rotate into altcoins? The real question is, what kind of participant am I? And do I have the emotional discipline to handle volatility without making stupid decisions? Now, let me ask you something directly, and I want you to answer this in the comments because I genuinely want to hear your perspective. If you had to choose right now, today, would you rather hold one full Bitcoin or a diversified basket of 10 altcoins with strong fundamentals and narratives? And why? Drop your answer below. And if you've already rotated some of your portfolio, tell me what percentage you've moved and what drove that decision. Because I've noticed something powerful. When viewers share their strategies and lessons learned in the comments, whether it's a smart entry, a disciplined plan, or even a painful mistake, it elevates the entire community. So if you're doing well, share a win. If you learned something the hard way, share that too. Let's build real knowledge together, not just hype and hopium. Now I'm going to shift into a section that sounds technical, but is actually the part that protects you from getting wrecked. I want to talk about what a shift really means in crypto. A shift is not one viral tweet. A shift is not one green candle. A shift is a sustained change in behavior. Yesterday, the default move for new capital was buy Bitcoin and hold. Today, that same capital is asking which altcoin has the most upside. That's the shift. And you can detect it with 3 clear signals. Signal number 1, the questions people are asking. When Bitcoin is the dominant narrative, the questions in communities are, what's the next Bitcoin price target? Should I take profits? Is this the top? When altcoins start becoming the focus, the questions change to what's the best layer 2, which DeFi protocol is undervalued? What's the next Solana? Which AI token is going to explode? Pay attention to the questions, not just the answers, because questions reveal where attention is moving. Signal number 2, the way influencers behave. When Bitcoin is pumping, influencers post charts, talk about institutional adoption, share macro analysis. When altcoin season starts heating up, those same influencers suddenly start shilling smaller projects, doing deep dives on obscure tokens, hosting spaces about the next 100x opportunity. They follow the attention because attention is their currency. So watch the influencers, not because they're always right, but because they're reliable indicators of where retail attention is flowing. Signal number 3, exchange listings and volume. When exchanges start listing more altcoins, when trading volume on altcoin pairs starts spiking, when you see coins you've never heard of suddenly doing 50, 100, 200% in a day, that's not random. That's capital rotation happening in real time. And if you're not watching those signals, you're navigating blind. Now, let's zoom in on Bitcoin dominance again, but I want to approach it like a detective, not like a cheerleader. When Bitcoin dominance is above 50%, it means Bitcoin is the king and everything else is background noise. When dominance starts dropping below 45%, it means altcoins are absorbing serious capital. And when dominance falls below 40%, you're typically deep into altcoin season, where even garbage projects pump just because there's too much money chasing too few opportunities. Right now, we're watching dominance carefully because if it breaks lower, the floodgates open. But here's the part most people don't understand. Dominance can drop for two reasons. Reason one, altcoins are genuinely performing well and attracting smart money. Reason two, Bitcoin is correcting, and altcoins are holding up better temporarily before they also fall. So dominance alone doesn't tell you everything. You need to look at total market cap, you need to look at Bitcoin's price action, and you need to look at which specific altcoins are leading. The best scenario is when Bitcoin is stable or rising slowly and altcoins are rising faster. That's healthy rotation. The dangerous scenario is when Bitcoin is falling and altcoins are pumping. That's often a trap because when Bitcoin really dumps, altcoins get obliterated. Now I'm going to give you a simple test you can apply this week. The next time you see an altcoin pump 30% in a day, watch what happens in your own mind. Do you feel excited because you see opportunity, or do you feel panic because you think you missed it? Your emotional response tells you what kind of trader you are. If you feel curious and start researching the project, you're thinking like an investor. If you feel desperate and immediately want to ape in without research, you're thinking like a gambler. And neither is morally wrong, but mixing the two is financial suicide. Now let's get practical. If you're considering rotating some capital into altcoins, there are two realities you need to accept. Reality one, not all altcoins are created equal. Some have real teams, real products, real communities, and real use cases. Others are literally just hype, marketing, and prayer. Your job is to learn the difference, and the only way to learn is to do research, read white papers, check GitHub activity, join communities, watch how developers communicate, see if there's actual progress or just endless promises. Reality two, timing matters more in altcoins than in Bitcoin. Bitcoin you can buy almost any time in a bull market and probably be fine long term. Altcoins have windows. Buy too early and you bleed slowly, waiting for the narrative to catch on. Buy too late and you become exit liquidity for early holders. The sweet spot is when the narrative is forming, but not yet obvious to everyone. That's the zone where patient research gets rewarded. Now let me bring in a comparison that makes this whole thing clearer. Think about Bitcoin like owning real estate in Manhattan. It's expensive, it's prestigious, it's relatively stable, and it's hard to lose everything. Now think about altcoins like owning real estate in emerging neighborhoods. Higher risk, higher reward, massive upside if you pick right, total loss if you pick wrong. Most smart investors don't go all in on one or the other. They diversify. They keep a Bitcoin core position because it's the safest bet in crypto, and they allocate a smaller percentage to altcoins for asymmetric upside. That's the rational approach. But here's the problem. When altcoin season hits, rationality goes out the window. People see their friends making 10x in 2 weeks, and suddenly their 70-30 Bitcoin altcoin split feels boring. They start rotating more and more into alts. They start taking leverage. They start chasing. And that's when the market punishes them, because the market always punishes greed disguised as strategy. So here's my framework, and you can steal this if you want. If you're a long-term holder, keep 60 to 80% in Bitcoin and Ethereum. Those are your anchors. Those are the assets that will survive the next bear market. Then take 20 to 40% and split it across 5 to 10 altcoins that you've actually researched. Not coins you saw on Twitter. Not coins some influencer shilled. Coins where you understand the thesis, you believe in the team, and you're willing to hold even if they go down 50% before they go up. And here's the most important rule. Never invest more in altcoins than you're willing to lose completely. Because in a bear market, most altcoins go to zero or close to it. The survivors are rare, so if you can't emotionally handle losing that capital, don't allocate it in the first place. Now let's talk about something almost nobody discusses, honestly. The role of narratives in altcoin pumps. Altcoins don't pump because of fundamentals alone. They pump because of stories. And the best stories are the ones that mix truth with aspiration. Let me give you examples. Layer 2 scaling solutions. The story is Ethereum is too expensive and slow. We're building the solution. That story works because it's based on a real problem, AI and crypto integration. The story is AI is the future and we're merging it with blockchain. That story works because AI is the hottest tech trend right now. Real-world asset tokenization. The story is we're bringing trillions of dollars of real assets onto the blockchain. That story works because institutions love it and it sounds legitimate. Meme coins. The story is we're a community-driven movement and we don't take ourselves seriously. That story works because it's fun and people love being part of a tribe. Now here's the key insight. All of these stories can be true and still result in tokens that go to zero, because narratives drive attention, but execution drives long-term value. So when you're evaluating an altcoin, ask yourself 2 questions. 1, is the narrative strong enough to attract attention and capital? 2, is the team capable of executing on that narrative, or is it all talk? Now I'm going to introduce a cliffhanger that flips the whole conversation. What if this rotation from Bitcoin to altcoins isn't just about affordability? What if it's also about the psychological need for hope? Because here's the uncomfortable truth. If you missed Bitcoin at $100, at $1,000, at $10,000, you know that even if Bitcoin goes to $500,000, you're looking at a 5x from here. That's great. That's life-changing for large capital. Now, before we go further, let me say something that might sound boring, but it's the truth. The best crypto strategy is boring. It's disciplined, it's repeatable. It's the kind of plan you can follow when the market is pumping and when the market is dumping. So if you're watching this and you've built a disciplined strategy, maybe you've taken profits at the right time. Maybe you've avoided FOMO. Maybe you've stayed calm during crashes. Share that in the comments. Not to brag, but to teach. Because your discipline might be the exact example someone else needs to see today to stop them from making a classic mistake like buying the top and panic selling the bottom. Now let's talk about the elephant in the room. Regulation and macro conditions. Because Bitcoin and altcoins don't exist in a vacuum. They're affected by interest rates, by government policy, by global liquidity, by regulatory crackdowns. And right now, in 2026, the regulatory environment is tighter than it was in 2020 or 2021. Some countries are embracing crypto. Others are banning it. Exchanges are being forced to comply with KYC and AML laws. Privacy coins are being delisted. The Wild West era is ending, and that has consequences. For Bitcoin, regulation is mostly a legitimization story. Institutions want regulation because it makes Bitcoin safer to hold. But for altcoins, especially the smaller, sketchier projects, regulation is an existential threat. Because if a project can't prove it's not a security, if it can't demonstrate real utility, if it's just a token with no purpose, regulators will kill it. So when you're picking altcoins, pay attention to regulatory risk. Projects that are building in jurisdictions with clear legal frameworks are safer long-term than projects operating in gray zones or outright ignoring the law. Now let me add another layer because we're building this story properly. Liquidity and volume. One of the biggest traps in altcoins is buying a token that pumps on low volume. It looks like it's going vertical. You ape in. Then you try to sell and realize there's no liquidity. Nobody's buying. The spread is massive. You're stuck. Always check volume before you enter. If a token is pumping but daily volume is tiny, that's a red flag. Real pumps have real volume. Fake pumps have bots and wash trading. Learn to tell the difference or you'll get trapped. Now I want to introduce another real-world behavior pattern that confirms this whole thesis. Go into any crypto community right now, Discord, Telegram, Twitter Spaces, and just listen. Listen to what people are talking about. If 80% of the conversation is about Bitcoin price targets, and macro, the market is still in Bitcoin mode. If 50% of the conversation is about which altcoin to buy, you're entering rotation mode. And if 80% of the conversation is people shilling random tokens and sharing gain porn screenshots, you're deep in altcoin season and probably close to a local top. This isn't a perfect indicator, but it's surprisingly accurate because human behavior is predictable at scale. Crowds move in waves, and those waves leave patterns you can read if you're paying attention. Now let's address a question I know some of you are thinking. What about Ethereum? Is Ethereum an altcoin or is it in a category of its own? Here's my take. Ethereum has graduated. It's not an altcoin in the traditional sense anymore. It's the number 2 crypto by market cap. It has institutional adoption. It has real-world use cases. It's the foundation of DeFi and NFTs. So when I talk about rotating into altcoins, I'm not talking about Ethereum. Ethereum is part of the core portfolio alongside Bitcoin. When I say altcoins, I'm talking about everything else. Layer 1s like Solana, Avalanche, Cardano. Layer 2s like Arbitrum, Optimism, Polygon. DeFi tokens like Aave, Uniswap, Chainlink. AI tokens, gaming tokens, meme coins. That's the altcoin universe. And within that universe, there are different tiers of risk. Top 20 coins by market cap are relatively safer. Top 100 is higher risk, higher reward. Anything outside the top 100 is extremely speculative. Know what tier you're playing in and size your positions accordingly. Now, I'm going to share a personal rule that has saved me more times than I can count. Never fall in love with an altcoin. Bitcoin you can love, Ethereum you can believe in, but altcoins are tools. You use them, you trade them, you take profits, you move on. The moment you start identifying emotionally with an altcoin, the moment you join the cult, the moment you refuse to sell, even when the chart is screaming at you to take profits, you've lost. Because altcoins are ruthless. They will pump 10x and then dump 90% and never recover. If you don't take profits, the market will take them for you. So set rules. If a coin does 3x, take out your initial investment. If it does 5x, take 50%. If it does 10x, take 80% and let the rest ride. Whatever your rules are, write them down and follow them emotionally. Because in the moment, when everything is green and everyone is euphoric, you'll convince yourself it's going higher forever. It's not. It never does. Now, let's connect this back to the bigger macro picture because everything in crypto is connected. If global liquidity is expanding, if central banks are printing money, if risk appetite is high, both Bitcoin and altcoins benefit. But altcoins benefit more because they're higher risk and higher beta. If liquidity tightens, if interest rates rise, if there's a global recession, Bitcoin might hold up okay because it's seen as digital gold. But altcoins get destroyed because they're seen as speculative tech bets. So your altcoin strategy has to adapt to macro conditions. In a loose money environment, you can be more aggressive. In a tight money environment, you need to be defensive. Right now in early 2026, we're in a mixed environment. Some liquidity, some tightening, some optimism, some fear. That means you can play altcoins, but you need to be nimble. You need to have stop losses. You need to take profits. You can't just buy and hold and pray. Now here's a cliffhanger I want to leave you with before we wrap up. If the rotation from Bitcoin to altcoins continues, and if retail FOMO accelerates, and if new capital keeps pouring into crypto, we could see one of the most explosive altcoin seasons in history. But if macro conditions turn, if Bitcoin corrects hard, if regulation cracks down, we could see one of the most brutal altcoin winters ever. Both outcomes are possible. Both could happen in the same year. Your job is not to predict which one happens. Your job is to be prepared for both. And the way you prepare is simple. You don't over-leverage, you don't go all in, you don't chase, you build positions slowly, you take profits systematically, you keep some stable coins on the side, you stay humble, you stay liquid, you stay disciplined. Because in crypto, the people who survive long-term aren't the ones who make the most in one trade. They're the ones who don't blow up. They're the ones who are still here after the next bear market. They're the ones who compound small wins into big wins over years. That's the game. And if you play it right, the rotation from Bitcoin to altcoins isn't a risk, it's an opportunity. But only if you have a plan. Now, last thing before we close, support matters. If this analysis helped you see the market more clearly, if it gave you a framework you can actually use, do me a favor. Subscribe if you haven't already. Like this video. And leave a comment, even just 2 words, prime currency. That's it. Because when you engage, it tells the algorithm this content matters. And when the algorithm promotes it, more people like you find it. And that's how we build a community of disciplined, intelligent investors instead of a crowd of gamblers. So do that right now. And if you want the deeper analysis, the real-time alerts, the portfolio breakdowns I don't share publicly, check out the membership options in the description.